Welcome to TheoTrade. This is Don Kaufman, December 17th, 2021. 10 minutes to go to the cash close here on this triple witching Friday. SPOOs are off another 47 points. They can't ring the bell fast enough here as there is sell side activity, it appears, into this cash close. We are also outside the lower edge of the SPX expected move. Can the bull market be sustained without the Fed? That and much more here on this weekend's update. First and foremost, let's give you a brief kind of synopsis of some of the trade activity that we've seen throughout the course of this week. Of course, it has just been, well, it's downright wild. I think the only way to actually explain this is to look at the S&Ps. And, you know, right now I'm looking at a 1 minute, only because we got 10 minutes to go to the cash close. You can see some pretty heavy sell side activity. Contract size is jumping. But moreover, and I think the important point to be taken right here, right now, take a look at the SPX. Specifically, what I'm going to zoom into for just a second happens to be the lower edge of the expected move. So the expected move in this past week of trade was just about $80. Of course, we'll look at this again just after the cash close here, but again, you're looking about just $80. So that's plus or minus about 80 bucks. We are now definitively outside the edge of the expected move. And when you do get outside the edge of the expected move, you just get dynamic hedging that can push markets lower. In fact, a great way to look at this, and I love it because, again, 9 minutes to go to the cash close here. You look at it on an intraday basis, intraday, 1 day, 1 minute, and you can actually see the dynamic hedge into the cash close. Again, we are outside the edge of the expected move. In fact, you know, the most I think, effective way to give you a synopsis of this entire trading week. It's exactly what I did on Wednesday. I mean, the entire week has come down to the lower edge of this expected move. I mean, you had this $80 expected move. Monday, there's just a little bit of sell side activity. Tuesday, we literally hit the edge of the expected move, break below it, bounce right back to it. Coming into Wednesday with the Fed, we're actually skirting the edge of the expected move. We explode back to where we started on the week. Thursday, we break back down, but Thursday, it doesn't do it justice looking at the S&Ps. You got to look at the NASDAQ got decimated. Then, of course, here we are on Friday, and the entire day here today, specifically, again, you know, you want that update on the marketplace. It came down to just skirting the edge of the expected move. Now we're actually just breaking off it a little bit lower. Again, you can kind of see there's some risk definitely starting to, what I say, proliferate into this marketplace. One of the things that I want to point out before we start talking about the Fed and can this market even be sustained without the Fed, the first thing in the market update that I think that's critical to understand is selling, it is proliferating. Okay, the advanced decline line. Let me explain exactly what this entails. Okay, this is of critical importance because we're sitting right now just shy of what we term full-blown correlation. If you're brand new here to TheoTrade and you've never seen this before, this is the S&P 100 advanced decline line. Push aside what you think about the market for a second. Okay, when we see high degrees of correlation to the downside, it'd be like, you know, 10 stocks up, 90 stocks down. All right. Once we see that high degree of correlation, the markets get hit as a whole. Like, nobody trades individual stocks. They fire into the S&P futures, and then literally computer systems fire baskets, you know, and orders into the basket of the S&P 100 or even S&P 500. So the reason I'm bringing this to your attention, if you saw the sell side activity on Thursday, okay, so we're actually backing up a day. Again, this is live right now, but on Thursday, the interesting point, on Thursday, markets were down, S&Ps were down, but the advanced decline line was actually 30K down, 70 up. Okay, you're like, wait, what? Yeah, if you didn't look at it, again, on Thursday, the advanced decline line was not just mildly positive, it was massively positive, because on Thursday, we were actually seeing nothing more than a handful of tech stocks that were getting hammered. It was all about mega market capitalization. Well, at this point in time, things have changed. What changed? Okay, take a look. Financials, broke to the upside, specifically on Thursday. Today, they're getting absolutely smacked. It's something I was actually talking in the Wednesday night video. I said, look for financials. They're now going to set the tone. And it's not the financials alone. If you actually take a look at the energy sector, lo and behold, almost the exact same trade. In fact, to apply auto expected moves does this justice, because look at the energy sector, got smoked outside the expected move. Taking a look at the financials once again, the financials, I mean, this thing has been Mr. Toad's wild ride, almost to the lower edge of the expected move. Yesterday hits just shy of the upper edge, and here we are again in the financials, okay, lower on the week. And it's the financials, though, that started to set the tone, okay, for knocking apart the advanced decline line. And if you get higher degrees of correlation, that's when the real selling can kind of kick in. And we're right there right now. We're right on the cusp of full-blown correlation. I believe, okay, it is absolutely imperative, critical to understand this. And this is where people go, but Tesla's rallying. Okay, but what about Tesla? Tesla is not even rallying back to the edge of the expected move. Well, what about Amazon? Okay, Amazon's actually holding it together. But the interesting irony of Amazon, it's not exactly on my radar screen, because Amazon's only up like 6% year-to-date basis. That doesn't even make a difference to me. What really makes a difference? Google. Google right now is getting whacked by the tune of almost 2%. You go, oh, what about Apple? Oh, come on, Apple's only up 32% year-to-date basis. So it's not going to fall into the same exact basket. You start to look at like NVIDIA, though. NVIDIA, we're losing it here in NVIDIA. We're losing it. What are we losing? We lost the 300 level, and now things are getting even more dicey at this point in time. But it's no longer just about mega market cap. Yeah, mega market cap absolutely matters. Absolutely, Microsoft matters. And this is how you're going to get your rip your face off rally probably on Monday. Nevertheless, the sell side activity is starting to proliferate. And when it does that, that's when things can get serious and serious in a hurry. Onward and upward from there, the dollar, I'd pay very careful attention to it. There's a lot going on in currencies around the world. And I think a lot of people probably, got some negative attention because of like Turkey, the Turkish lira is an absolute like free fall. Maybe that, is part of the reason that the dollar is rallying, but neither here nor there. What you have to understand about the dollar rallying, okay, is in the world right now, our junk is better than their junk, and junk being, of course, money. The U.S. has done a phenomenal job of baking into the hearts and minds of everybody. Nobody's running to the euro if risk starts hitting the fan. Nobody's running to, the Chinese yuan if risk starts to hit the fan. We're going to go, oh, I'm going to the Russian ruble. Okay, nobody wants to buy the pound. They go to the dollar. And if risk is starting to hit right now, you're starting to feel it, because the dollar, it really accelerated. My, oh my. I look at this as a very definitive sign of risk. And at this point in time, you're on notice. I think the dollar is ready to break out to the upside. With this next, okay, so the dollar, to me, clearly signals risk ahead. Of course, you're going to think to yourself, well, next week, look at the calendar. Right? We're coming into a holiday week of trade. In fact, Friday, the market's closed. By the way, this is a little bit of an unusual week of trade. If you haven't looked at the calendar yet for next week, let me take you into it. We are open Monday, Tuesday, Wednesday, Thursday. There's no half a day of trade. Instead, they're just going to close the market. Okay, on Friday, obviously Christmas on Saturday. They're going to close the market for Christmas Eve on Friday. So we're going to have 4 full days of trade. Again, 4 full days of trade. And everybody looks at this and they go, yeah, but nothing's going to happen next week. Well, that's one of the things we're going to discuss here momentarily. Is nothing going to happen? Because there's a $90 expected move 4 days, which is bigger than the expected move this past week. And we had 5 days. So I got your nothing right here when it shows $90. Don't listen to me. Look at the expected move. The other aspect, okay, everybody's trading from home, and I wanted you guys to know this. I got a lot of buddies that still trade in the Chicago area, work at some fairly significant derivatives firms. All the trading firms have moved to secondary COVID protocol, which means they are set up to be able to trade from home. Some of them trading from Florida, possibly. Depends upon what firm you work for. If you guys know this, there's a very large firm, Citadel, who's actually set up at a couple of different areas down in the Florida realm. Nevertheless, the trading firms have actually moved to that protocol for COVID. So in effect, okay, people, everybody's sitting at home, and you need to know that. And I said that this past weekend. I'm going to say that again this weekend. Everybody is on deck. There's nothing else to do. Okay. Retail as well. What are you going to do? You're going to sit home and hang out with the in-laws? No. You're going to sit in front of your screen for 6.5 hours a day for 4 days. Then come Christmas Eve when the market's closed, you're going to wish this marketplace was open. All right. So I wanted to give you just a brief update. And again, a very, very brief update. There's no sense like harping on the fact what happened in the QQQ. The Qs, okay, they got hammered. But lo and behold, they haven't necessarily broken to the downside. And it's just one of the things that I'm going to cover here momentarily, right? And with that, I think it's imperative to also understand a little bit about what's going on in terms of volatility. By the way, we're coming into the close. There's 13 seconds left. And what are we seeing right now? Sell side. It is getting risky out there. Can you feel it? And by the way, if you take a look at the SPX, the edge of the expected move, it's right here. There's the closing bell. It's 46.32. We actually closed. All right, just about 12 handles below that. The interesting irony is last week we were just a hop, skip, and a jump above the expected move. This week, okay, outside the expected move. We're going to come back to this idea of expected move here momentarily. All right, back over to volatility. Okay, there's a reason that I was mentioning the Qs there just a moment ago. I know I'm jumping around. Okay, come on, man. The market just finished. But in the QQQ, we haven't broken lower. We haven't broken lower inside of the spiders. And I mean, come on, we are just one day removed from the all-time high. I mean, that's what people are looking at. But as a dip buyer, you need to understand something about the marketplace right now. When it comes to dip buying, first, I would look and consider the volatility. I'm not feeling the fear. And the VIX is kind of dead right now. So one aspect that needs to be explained, this is not a positive necessarily for the marketplace. That's why I was relating this to dip buyers for a second. I'm going to talk about dip buying here momentarily, but if you take a look at the VIX, you look at what happened to the market today. The VIX felt like, come on, the VIX was up like 6%. And you're like, oh, because we're going into a holiday week of trade. Again, don't start that, right? Just explain it's a holiday week of trade, but it ain't going to matter. Everybody's going to be watching. So the VIX literally shrugs its shoulders at this. Right? When I say shrugs its shoulders, you look at the VIX and you're like, okay, it went up 6%. SPOs are down 50. 50 is a 1% move. I mean, 1% move ain't half bad. Why isn't the VIX moving? I'll tell you exactly why the VIX isn't moving. Because the VIX, if we go over to the spiders, the VIX saw a considerably uglier move, if you will, right here. I always like to explain this because I think it's absolutely critical for people to understand. Okay, the VIX spiked, right? So VIX spiked. And when did VIX spike? Right here. And it spiked all the way into the 30+ handle. Okay, so we start to have some sell side activity. A little bit yesterday, a little bit today. And the VIX just sits there. It's like, I don't really care. The reasoning that goes into this, okay, it's like watching a really, really bad B horror movie. Okay, and the first time we go down, and the first time, you're like, lady, don't go into that closet. And of course, the lady goes into the closet and somebody comes out like an axe murderer and you go, and the market volatility spikes. Well, this is the second time. Lady, don't go into the closet. And of course, nobody cares at that point because you're like, oh, yeah, the axe murderer's in there. That's exactly the same way that the volatility works. It's not a good thing. It's not a good thing because what it does is actually opens the door for considerably more risk. Vol futures are also in big contango. So one thing that I like to explain is I'm not feeling the fear. If I'm not feeling the fear, neither are you. All right. If you don't understand what feel the fear is, you ain't been in this business long enough. You got to look at a marketplace. I don't care whether you're bullish, whether you're bearish. All right. Seriously, I got positions on. I'm bearish. All right. This account's up like $6,000 today. All right. There's no fear here. It doesn't matter again whether I'm bullish or bearish. A couple of different accounts in here, but it's neither here nor there. Okay. No one's feeling the fear in the sell side activity. I'll further that. I'll prove that one. Just look at the contango inside of the volatility futures. You got to forget, by the way, about 5-day vol futures. Those are toast. You got to start looking at like 33-day vol futures. And I just want to highlight this for a second. When I talk about contango, all right, 33-day vol futures. Jan vol futures are sitting at 23 and change. And then you actually have 61-day vol futures, the Febs, that are basically over $1 above that. Again, we're 23.65 at 24.72. So vol futures still look like this. When you start to feel the fear, that'll flatten out. When we're actually in the throes of something serious, it'll invert. So if you're looking at this marketplace, and this is why I said this is not a positive, this is negative. Like if you're looking at this marketplace and you're like, oh yeah, man, people are totally capitulating. Capitulating? They haven't even warmed up their engine yet. This is basically, that's what it's saying is, yeah, I've seen some risk. Yeah, whatever, man. And that's exactly what the market's saying. Also, we have another issue. Skew is really low right now relative to where it has been. That doesn't leave me warm and fuzzy either, and I'll tell you exactly why. All right, for the first time in a long time, people are not necessarily hedging. They're not hedging. They actually, traders, stop your hedges. The hedging actually backed off, probably because the Fed just passed through. So the only thing that remains like pretty extreme, the VVIX, is the volatility index. There's still a lot of options being bought inside of the VIX. So the VIX is actually, the VVIX, I should say, is through the roof. Again, it's the volatility index. All right, it's in what I term never land out there, and continue to actually pump higher into today's close. So if somebody's hedging, it's being done very, very quietly inside of VIX options. All right, so with that, okay, we have a difficult scenario here because this bull marketplace was largely predicated on a lot of stimulus. And every time we got more stimulus or a bad jobs number, you get like a bad jobs number, market's like, love it, man. Love the bad jobs number. Doesn't matter whether you get a bad jobs number right now, okay? Because the Fed, they ain't got your back no more. And you need to understand that, right? You can get a bad jobs number. Bad news now is bad news, right? Inflation is even worse news. Bad news in jobs is going to be horrible news. CPI, that could actually really freak the market out. PPI, all right, again, anything that's going to display inflation, okay, or a lack of jobs, or any type of slowdown, including, in possibility of a COVID wave. I hate to have to throw that in there, but the Fed does not have your back. They got to fight inflation. They made that very, very clear. Inflation now, okay, is the enemy. It's no longer a virus. It's no longer like jobs. Inflation's the enemy. Okay, and this very well could mean they don't have your back, and the markets they're not going to have an appetite for risk like they had. All right, and that is upside potential could be very, very limited. Premium sellers, I think you need to be warned. Risk could become extreme. One aspect I keep pointing out to individuals, this has been a really, really one-sided market. Like, forget what you think right now. Just open up like a 3-year. Okay, just here. This is just a 3-year chart. When I say risk has been like really, really one-sided, that, okay, is about the most unnatural thing that anybody's ever seen. If I can draw, a perfectly straight line over this, it's been like the little mountain climber to the upside. Again, it doesn't exactly leave me warm and fuzzy. At what point do we start to see, and I talked about this a few weeks ago, is this going to be the beginning of the great unwind in the marketplace? I think we're finally at or near just that. And I think that's also, I'm going out on a limb and saying this, we're one day removed from the all-time high. But you can feel it, you can see it, you can taste it, okay? Something's changed in this marketplace. And the dip buyers got absolutely decimated, specifically inside of today's trade. If you looked at like the NASDAQ today, you bought the dip, you got hammered, right? And you tried to buy the dip again, it came back down. It is dangerous out there. Look at the 30-day 1 hour inside of the NASDAQ. Right, and this is where, dip buyers have come to die. And I'm going to tell you right now, okay, dip buying, if viable, has to be defined risk. If you don't know how to use a spread right now, an option spread, okay, you're going to die trying. I keep mentioning this, and I'm just going to say it again. Markets are incredible at roping more and more people in. I used to call this the trader in the rope. Listen, I spent 15 years at Thinkorswim and TD Ameritrade, the brokerage side of the business. I have seen the movie many, many times. Okay, this is just roping more and more dip buyers in. If you're going to do it, you define your risk or you die trying. The other aspect, for those of you that are big dip buyers, crypto is now moving with the NASDAQ. Again, that too does not make me feel warm and fuzzy. This was a lot of people's hedge because it traded like in a bit of an autonomous fashion. But this week of trade, and specifically today, oh yeah, they bought the dip and then it sold back off in here. It is moving with the NASDAQ. Again, if you are going out there and you are going to sell premium, at this point, do it with a very, very light hand. I'm coming back to that because I am a big time premium seller right now. And you're probably asking, why is he not out there selling premium, man? The volatility, what? The volatility is not up. Okay, it shrugged its shoulders. Oh, the VIX is up a point with the SPOOs down 42. Okay, so forget it. Like, we're not rocking out in volatility, but we might be very, very soon. You could see a fast break, even into like, don't count out like the 430 mark, all right? But again, you got to feel the fear, and we're not there yet. And that's one of the huge points that I want to make in this weekend's update here. This is not supposed to be like a big bearish statement. I'm going to be the first one to tell you we can bid right back up. Again, my logic is they're trying, all right, just to rope more people in. And I know it sounds so diabolical. They are trying. Listen, the market is an entity. Okay, and it's constantly trying to rope more people in. As I said, it sounds so diabolical, but at the exact same time, you have people that are going to fight this marketplace until their last dollar. That's why you see people coming out there, buy the dip, we rip, and that thing just fell right out of bed in there. All right, onward and upward. Crypto's now moving with the NQ, which means if you've got positions that are NASDAQ related and you've got any type of crypto, you could be in serious trouble on both fronts in a hurry. SPX expected move. Last week, we had a $79. Let's go to the SPX here briefly. Last week, again, we had a basically an $80 expected move. Now, I'll reiterate. That means you're supposed to move up $80 or down $80. Where do we close? We have definitively closed outside the lower edge of the expected move. What's next week? Next week is blank on here. I'll tell you next week. Next week will officially be settled out. Okay, officially be settled out in approximately 5 minutes. I use, okay, the SPX close. The SPX close, okay, these options can still move in price until 4:15 Eastern Standard Time, right? So we're going to be right around a $90 expected move. Why is this important? We just passed through a Fed week. We had a lot of risk this last week, okay, a lot of economic data this coming week. We only have 4 days. And yes, there's some numbers coming out, as I was saying, like every number that comes out. Now I say every number, every economic number that comes out, including things like, oh, I don't know, GDP. Okay. If it ain't good and the Fed doesn't have your back, you're in trouble. And you better see that right now, because can the bull market be sustained without the Fed? I do not believe so. I think we're going to go into some fits of rage inside of this marketplace. But every economic report that comes out over the next 4 days becomes viable at this point. It's the first time we're going to have economic news come out where the Fed doesn't say, don't worry, I got your back, because they don't have your back. And you should know that. That's one of the key, things that have changed. So with all due respect, you're on about a $90 expected move. We're going to move $90 higher, $90 lower in 4 days, and we don't have the Fed announcement this week. What can you say about that? Risk has cometh. All right? Do not jump out there to sell premium at the first sign of risk. All right, make sure that everybody's feeling the fear. Make sure those vol futures start to get a little crazy. The VIX starts to be rocking to the upside before we step out and start taking some risk. With that, I want to thank everybody for tuning in to this weekend's update here at TheoTrade. Have a wonderful weekend. Bye-bye.